Okay, so Shana Judd and I, Shana's with Mutual of Omaha Mortgage, and if you haven't seen the other two videos that we put together, they're great. You should look at them. The first one, it's a little long, but it needed to be long so that Shana and I could discuss what is a reverse mortgage. There's lots of myths and lots of misunderstandings about what a reverse mortgage is. So segment one is out there, and that is what is a reverse mortgage. And then we did a segment on the HECM, the reverse mortgage for a purchase. So this is how I actually met Shana. She did a great job for my clients. They were 81 years old buying their first home. So explained how that works and why it's such a benefit. So this is our third video here. The segment we're going to do now is about refinancing with a reverse mortgage. A lot of folks are in their 70s, they still have an existing mortgage, maybe they want to refinance. So we're going to talk about the benefits of a reverse mortgage for refinance. So again, I'm Joanne Toledo, RE/MAX Masters Millennium. This is Shana Judd with Mutual of Omaha Mortgage, and I'm going to turn it on over to you. Shana, go ahead.
Okay, thank you. Thanks, Joanne. Thanks for having me today.
Absolutely.
So I'm a reverse mortgage specialist. This is all that I do. I work with older adults on the reverse mortgage for purchase program, as well as just doing a reverse mortgage for refinance. And the reason that the reverse mortgages have become so popular today is that there's been a lot of research done on how the reverse mortgage program can help people preserve assets and eliminate the mortgage payment. So that's what a reverse mortgage is. It's simply eliminating the mortgage payment and starting a line of credit.
Okay.
Now, we talked about this in the first
So
segment.
refinance. Let's say we are in a position that we think we want to refinance, and we're in that stage in our lives, and someone would call. Why would someone call you to do that refi, and how does that work?
So they would call because they want to eliminate the mortgage payment. More than 70% of people in this country still have a mortgage payment in their 60s, 70s, 80s, and 90s. And that's why they would call, is to say, hey, I want to eliminate the mortgage payment. We can also do a reverse mortgage on a home that doesn't have a reverse mortgage, or excuse me, does not have a mortgage.
Okay.
And we can do the loan and start what's called a reverse mortgage line of credit. So it's a pretty simple process. They call and we just do an informational meeting. And really, I spend a lot of time working with the homeowners and their families in evaluating, is this the right program for them, and asking a lot of questions. And one of the big questions is this a good home to age in place? And if it's not a good home to age in place, then
Maybe the purchase is better.
yes, the HECM for purchase is much better.
And so you counsel them on that? You talk to them about the house? Okay.
I do, yeah.
Okay.
We talk about that a lot, because what I find sometimes during that initial informational meeting is that they're really not in a good place to age in place, and they really are interested in selling, but they never thought that they could buy a home that they want. That all of the viewers have to tune into the previous segment to learn about reverse mortgage for purchase. So this one, we're really just focusing on reverse mortgage for refinance.
So that works. My folks are out of state. They have a home they built a few years ago. They had a mortgage. They have a mortgage. And I think I told you they're going with this reverse mortgage option. So they're going to do refinance. So they're going to do what we're going to talk about today. So that is the route they've decided. They were counseled by their financial planner, so they're not going to have a mortgage payment anymore. And that's the program you're going to talk about. So perfect. Going back to that, they have a loan. So my question is from people that are in that situation is, what if I have a loan on my house now? Can I still do a reverse mortgage?
Yes, absolutely. So just to give you a couple of examples, I had a client a couple of years ago where we were doing a reverse mortgage on her home, and she had a mortgage payment of about $1,200 a month, and she really was struggling. She even had some renters in the house. She was renting rooms to college students to help, to help give her enough monthly income. And she had lived a good life. I mean, she had at one point, had some very significant assets. I mean, over $500,000 in her asset accounts, and she had just been living a good life and had gone through a lot of money. And her husband had had some health problems. So with the reverse mortgage, we were able to eliminate that payment, and she was able to stop getting the renters. So she was able to just have some peace and quiet and live on her own without the renters. Exactly. Okay. Exactly. And for your parents, peace of mind is a big thing that comes into play a lot.
Payment. It's the payment.
Yeah, it's eliminating that
They're on
mortgage
fixed
payment.
incomes at that point, their retirement income, and so it's that peace of mind. I know means a lot.
It does, and their financial planner recommended it because by eliminating the mortgage payment, they're going to create cash flow, and they're going to preserve that money under management that he's managing for them.
Right. Okay, so again, we talked about rules in other situations, but what are the rules on a reverse mortgage refinance?
So first of all, it has to be a primary residence, and those rules just are across the board with all reverse mortgages. It has to be a primary residence. So the homeowner has to live there 6 months and 1 day.
Okay.
And I have some clients that have second homes, Florida, Arizona, California, no problem. They can have a second home. They just have to have the reverse mortgage has to be their primary. That home has to be their primary residence.
Makes sense.
Yep, and they have to pay the property taxes and the homeowner's insurance.
Okay.
Really important. As you know, it doesn't matter if you have a loan or not, you still have to pay
your taxes.
And you want to pay your homeowner's
Your
insurance.
Right.
You want to keep paying that, so that's super important that they continue to do that.
So that makes me think of a question. Obviously, the lender wants to know that the house is being maintained properly as well. Is that part of the loan? Is that
agreement?
Yeah.
With any loan, with a traditional forward loan
okay.
and a reverse mortgage, the lender does require that the home be maintained.
Properly maintained.
The property be maintained, absolutely.
Which is a little more difficult at that stage too sometimes. Just made me wonder about that. So how does a reverse mortgage impact someone's portfolio? So our financial portfolio. We are going to refinance our loan and do a reverse mortgage. How does that impact our portfolio?
Well, the research and the math shows that it has a very positive effect.
Okay.
So it can actually help the portfolios to survive. And this is why the financial planning community is really recommending this program so much today, when appropriate.
Yeah, I know they are.
Yes.
They are really recommending people do that. So.
Yes, absolutely.
So
it helps a lot. And one of the things that we may or may not touch on today if we have time is that, taking draws off that reverse mortgage line of credit in a down market, so people don't have to take distributions off of their assets in a down market,
right?
Because that's a very bad time to be taking distributions when the markets are down.
Okay.
So that's a strategy that is very very popular. There's a lot of uses for the reverse mortgage as a financial planning tool. And again, going back to the two uses, eliminating the mortgage payment creates cash flow and starting that line of credit. So there's a lot of different categories under those two areas.
So they can leave everything else untouched.
Exactly.
Okay.
Yeah, perfect.
Yeah, that makes sense. Okay. So can you talk about now the coordinated approach versus the conventional wisdom here?
Okay, I'll do my best. This is something that we talk about with financial planners every day. Conventional wisdom in the world of financial planners really is, trying to preserve, number one, preserve assets for their clients. They want to preserve cash as much as possible. But the conventional wisdom is that you take distributions on that portfolio, and at the end, when the money runs out, you then do a reverse mortgage. The coordinated strategy, today's world and today's new thinking, what the research shows is that we want to do the reverse mortgage as early as possible, which is age 62, and implement it so then the client can take draws off of that line of credit.
Okay.
So they're not taking draws off, or they're not liquidating assets in a down market.
Got it.
So at the end, what the research shows, and all sorts of studies that will make most people's eyes roll to the back of their head, put most people to sleep, but I'm kind of a nerd about all this, so I really enjoy it. But at the end of the day, what it really shows is that the portfolio has a chance to gain momentum and recover, and the math shows that people typically are left with a higher balance of portfolio survival by implementing reverse mortgage early on.
And I know for a fact that the studies show, those infamous studies, people tend to withdraw when the market's going down, and it's the worst time to do it. So this makes total sense. That
Yes,
totally makes
exactly.
sense.
Yes.
Okay.
That's
Well,
so
thank
true.
you for that.
Yeah.
And so, how does this impact the inheritance? This is always, I know, what everybody's concerned about. The parents are concerned. So how does this impact the inheritance for the heirs of the people who do the reverse mortgage?
And this is a really important question, which is why I always invite families to sit down and talk during the informational meeting to get all the facts. So there's a couple of things that are to touch on here that are so important. First of all, there are a lot of families out there that are helping their parents every month and depleting their own assets to help their parents.
Right.
And we have to take a step back and say, wow, what are we doing here and why? Our seniors in this country have over $7 trillion in home equity. $7 trillion in home equity. And we've got kids shelling out, a couple thousand every month sometimes when the parent's home is free and clear. So just because we've always done things that way doesn't mean that we have to keep doing it. What's the definition of insanity? Right? You keep doing the same things over and over and expecting different results. That's insane. So, there in those, so you've got that situation where you've got kids that are helping out parents, and then you've got another situation where the parents really want to leave something for their kids. So in a situation when we're doing reverse mortgage and working with some financial advising clients, and there's a portfolio, that portfolio actually has a chance to get bigger and grow.
Right.
And it can actually be a better outcome for the heirs. So they would inherit more money.
Right. So as you were explaining with the coordinated approach versus that conventional wisdom, that kind of ties into that. So
yes,
exactly. Okay.
It does. I have a great example of an engineering client that I just loved. I loved working with him. He was great. He called me the day he turned 62. He was so excited to do his reverse mortgage. And his house was paid off, and he had some really good assets under management. And he had calculated that by doing the reverse mortgage and really using his equity instead of using his cash, that he was going to double or triple that portfolio and have more money to leave for his children.
And he figured it out.
He had figured it out, and it was great. I mean, it was just.
You love it when they come to you like that.
Yeah, he was really a brilliant guy. So,
Okay. And then my last question is, can you give us some examples of actual clients? I know in the purchase segment we talked about a common client that we had, and that was a great story, but do you have some examples that you mind sharing so people can actually maybe fit it in and it makes sense to them? It might be their situation.
Yeah, sure, absolutely. Well, I just shared the story about the engineer, which is kind of a little outside the bell curve, of course.
Right.
But oh my gosh, there's just so many wonderful families that I've worked with. one family comes to mind, actually. It was the parents of a realtor,
Okay.
where these folks were having some health problems, and she wanted them to downsize, and they were in a 4-level home. They were the
Right.
original owners. She had grown up there, and we had a family meeting with, you know, her parents, and then she had another sister that was there, and they really wanted to stay in the home. And we, so they had a loan on the house. I mean, the house had been paid off, and then they had put another loan on it.
Okay.
We refinanced it, eliminated the mortgage payment, and started a line of credit for them to help with home health care.
Mm-hmm.
That was a big deal. They didn't have a whole lot in savings, you know, maybe just $100,000 or a couple $100,000. But this was really impactful for them because their wishes were to stay in that house.
Yeah.
They did not want to leave. And so by starting that reverse mortgage line of credit, they've been able to take draws and bring in some home health care. One of the things that they are going to do is get a chairlift on the stairs, because this is a 4-level home.
Yeah, and they need to get around.
And they need to get around. And the wife had a couple knee replacements.
Mhm.
I think both knees had been replaced.
Yeah.
So that was just a wonderful, outcome, a great result, and you know the family was really pleased with that. So, gosh, there's so many. Another situation I had. This is kind of a heartbreaking story, where this woman, she had a mortgage payment of about $1,100 a month, and her Social Security was only, I think it was like $763. And her husband had run off with like somebody from his past and left her, and they had gone through a lot of money, and it was a great home for her to age in place. It was a single family, all ranch, you know, 1-level home, and it really worked out well because we eliminated that mortgage payment. And then her kids were still helping her a little bit because she only had that $763 a month in Social Security. But it was a game changer. I mean, that really changed her life, and it changed the life for the kids too.
Right.
So unfortunately, she passed away about a year ago.
Oh.
So she stayed in the home for
As long as she
several
could.
years, but that's where she wanted to die. She wanted to age in place and stay in her home, and she did not want to go. She didn't want to move in with her kids.
Right.
And that's the other thing. That's just,
That's hard.
I've had, oh gosh, one of my clients one time, she, the financial planner said, well, do you want to move in with your son? And she said, I don't want to move in with him. I'm independent.
I know.
And she wanted to keep her independence.
Right. That's important. I think, as I mentioned before, I mean, you're specially trained to deal with seniors, and I've gone through the same thing, and I just have like a soft spot for people, but they're stressed at that age, and a lot of times they really don't feel well. A lot of them don't, and they're attached to their family home. The family's moved on, and they don't want to go to a nursing home, or they don't want to go live in an apartment somewhere. Their home and all the memories they have are in that house. It's really hard when you have to move them out. I've had to move people, and that's one of the hardest things to do. So then you add the stress on the family, and you know, worried about mom and dad, you know, are they going to be okay? The financial burden on them too. So I think some of these programs really have benefited socially our families, and doing a more responsible thing than they lose their homes and they really don't have anything. So
Yeah.
I love the programs that you guys are doing. I'm grateful to you, Shana, working with you and having that professional. I know I send people to you. People ask or they're worried about their father, their grandparents, or whoever. So I really value your professionalism and your experience. So
thank you.
Yeah.
Thank you. Well, you've been great to work with, Joanne. Amazing with your clients. So
Well,
really, thank Thank you.
It's a pleasure. I love my job. So
Mm-hmm.
anyway, thank you for doing these 3 segments with me. Again, this is Shana Judd. I'll let you give your information and your contact info. If anybody has questions, reach directly out to Shana. I'll be sharing these as well, so we'll put your contact info out there, but you're welcome to give out your info.
Okay, yep. So my phone number is 303-918-7013. 303-918-7013. And then my email is sjudd@mutualmortgage.com. And I think that'll be posted as well.
I'll post it, so
yes,
anyway.
exactly.
But thank you so much again. I think these were great, beneficial to some of my clients, some of their families. Welcome to share them and reach out to us if you have any questions on any of this content.
Okay.
All right, thanks, Shana.
You're welcome. Thanks, Joanne.
You bet.